You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Monday. It is noon Central. It is 1 p.m. Eastern. It is time once again to kick off our broadcast week here on the old Options Insider Radio Network. How do we do that? We do that with the old first episode of what the cool kids call the OB, a.k.a. the Option Block, a.k.a. your bi-weekly source for all things options related. My name is Mark Longo from the aforementioned network, as well as, of course, from the ever-exciting OptionsInsider.com. Some new bells and whistles coming there pretty soon, as well as maybe to the network. Stay tuned. Some fun hints, some fun teases going on as we're working diligently like busy little bees behind the scenes. Know what you guys can do, though, in the meantime? Keep rating, reviewing what you hear here on the network if you like it. If you don't, blame the Rock Lobster. You can still rate it. Of course, keep those questions and comments coming, too. We do love to hear from you guys. Speaking of hearing of things, we do usually like to kick off the broadcast week. We'll have a little fun, kick things off in a cheerful fashion. It's been more important than ever of late as the news sometimes is a little bit dire out there. So let's keep that tradition alive. I know you folks love it. Let's kick things off with our Guess That 80s TV Theme Song game. That's a fun one. That's a hard one because it's about as generic of an 80s theme as it gets. I could see that being applied to a legion of just generic 80s sitcoms and everything else out there. Give me a little bit of a hint of perhaps what genre this one. Of course, if you hear that and you think you're watching some rock and action show, you're in the wrong genre and indeed in the wrong decade. You obviously missed all of the 80s. Let's go out around the horn now. Let's go out now to our reigning and defending, some may say undisputed, others may dispute his guesses, but nonetheless, he is our champion for the 80s guessing game. He is Uncle Mike TOSAW. You guys can follow him over there at Mike TOSAW now. Brand new addition to Twitter. He's already got 50 followers, the big 5-0. He's already 50. So he's getting up there already. He's getting a little bit big in the britches. Let's see if we can bring him back down to earth. Uncle Mike TOSAW, A, welcome back to the program. And B, can you name that somewhat nondescript tune, sir?
Well, first off, happy to be here, and thank you to all my 50 followers on Twitter. I am honored and humbled, to say the least. Still have a ways to go to catch up with you veterans that have been doing this for 10 years, but I'm getting there. I'm doing my best. So with that, very excited. But in terms of the TV show, I'm going to go with Alf.
One of these days, I want to be in the same room as you when you do this and watch you, just to make sure there's no secret Shazamming going on behind the scenes or anything else like that. Because, yes, once again, Uncle Mike has pulled it out without even any real difficulty. That's a pretty nondescript tune, but all right, no, I'll give it to you. You get Alf. There you go.
I watched that show a lot. That was one of the shows I did watch very regularly. I was a big Alf fan back in the day. And, the other secret to knowing all these 80s theme songs is I'm realizing as I get older, like I said, there's a reason why I was 300 pounds at age 16. I think I watched a lot of TV.
There you go. Well, it's coming back in some valuable form right now in terms of your championship defending, the reigning defending 80s TV themes. I didn't go to our next guest, the Rock Lobster, because I know he barely saw anything in the 80s, so he never would have got that one. He is the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Line Capital. Mr. G, welcome back to the program, and I'll just throw it out there. Did you have any inkling what show that was?
Not a chance in holy heck. And I gave you the G-rated answer there. No chance. I was actually going to guess Different Strokes, to be honest.
That would have been a good guess. You know it's Different Strokes because they say the words Different Strokes about 80 times in the theme music. Different Strokes. That's why we haven't played that song, because it's kind of easy. I think even you could get that one. Maybe next time you're on, we'll do that one just for you, Mr. Rock.
And let me go first, too, by the way.
Yes.
I want to really go first. I spent most of the 80s in college, so I didn't watch TV. I was basically, I was in college. There was a lot of other things to do besides watch TV.
You were drunk 24/7 in the 80s. That's what you're telling us. And now you're coming out the other side. The other side of that decades-long bender as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what is lighting up our screens here on this Monday, and a little bit of a weird one on the screens. Kind of a mixed bag. Kind of depends where you hang your hat out there. S&P slightly in the red, off about a third of a percentage point or so. Dow actually up about a third of a percentage point, so the same percentage in the other direction. And NASDAQ deciding all bets are off. We're going to the dark side, off over 1.5% right now. So it's very much a pick your poison kind of day, where you hang your hat, what you're trading, what kind of day you're having out there. Coming into Showtime, VIX was close to about a 23, which puts it almost exactly unched. It has trended down a wee bit now, down to about 22 and change, about 22.35 or so. So that puts it down about 2/3 of a point from where it was this time last week, or I should say last show even. A VVIX at about a 117. That puts it down about 6 points from our last show. Come into Showtime, VXX was at about a 15.3, so that puts it down about half a point. Now it's down about 15.2, so that brings it down even more. That brings it down to 0.6. So, yeah, we were talking about it on vol views there. It's starting to get in that range, that territory where you start looking and saying, is that reverse split perhaps on the horizon, as Mr. Once and Future Dr. Vix pointed out on Friday? That's something to pay attention to, because it does make the options out there get a little bit wonky as you start getting towards that reverse split time. Something to bear in mind if you're out there playing the VXX erosion game. And VolQ coming at showtime was at about 25.25, up about 1/4 of a point from our last show. Let's see how that's looking. Still exactly about 25.25. So VolQ staying firm, not surprising. NASDAQ taking it on the chin out. Let's go back around the horn. He won, so he gets to go first. Mr. Uncle Mike, you of the 50-odd follower legion on Twitter, sir, what is lighting up your tape today?
So this is kind of a weird day today in that I remember so early in the morning, I'm looking at the headlines and the headlines are all saying market futures are down based on 10-year note yield rising. But the 10-year note yield isn't any different from what it was last Friday, or not much. We've had minimal movement on the on bonds from that standpoint. I looked at the 10-year note itself that's had minimal movement, and IEF, what I follow a little bit more closely, it's down 0.1%. So we really didn't have a lot of movement. So it was almost like it seemed like the headliners were searching for some type of reason with this. And so on there, it's a very unique sector day in that money is coming out of technology right now, because the technology sector is not pretty at this moment. Commodities is where there is a lot of money flowing into at this point in time. My beloved silver is up 2.7% on the day. So we are getting a pretty decent sized bid with that. And then the big story of the day, expanding on commodities, are energy stocks. Holy bananas, as Mark Sebastian would say. XLE is up 4.5% on the day. So getting a lot of movement with that. And it's kind of unique from the standpoint that we're having such a large move in energy. We're having a pretty decent sized move in financials. XLF's up 1.1% on the day. And on that, it's like the oil and financials have the oil and the financial bulls have outfought the bears in technology. Combine that with the fact that we have a little bit of a rush into commodities, and we've made for a very interesting day today. And by the way, Bitcoin's actually down 5% on the day. So everyone always likes to talk about how crazy it is when it goes up. I'll be the naysayer. I'll be the anti-Bitcoiner. It's down. But in defense of Bitcoin, though, it is up from its lows, that's for sure. So it was down a lot more on the day. So we have a lot going on. So what do we make of this in terms of where we can go with it? We've had, I believe we've been down, 4 days in a row now on the S&P 500. So as always, I've never met a down market I didn't like to buy. Well, I shouldn't say that. Last spring, I sure didn't want to buy any of that. But on some of those days, I feel that where we're positioned right now, I like going a little bit more short term on premium with which I'm selling if possible. So I did make a little minor adjustment this morning on my aggressive strategy with that. But aside from that, I think that where we are right now, S&P is down 0.3% on the day. On the VIX, I'm anxious to hear what Andrew has to say about the VIX on the day as well. That's down roughly 1% on the day. So a lot going on today, and different things are happening in different ways to make it so that on the surface, S&P's not really moved that much on the day. We're down 0.3%. It's a boring day. But if you look under the hood, there's a lot of good things and a lot of bad things making it a not that big of a deal thing. Interesting day.
Interesting day indeed. Let's turn on out to the dark and stormy hamlet of the GIOVINAZZI compound there on the shores of Maine. Waves crashing, lightning and thunder raining down from the heavens. Mr. Rock Lobster, sir, what is lighting up your tape on this ever stormy day out there in the land of Maine?
So I was just thinking, one summer you have to come with your family so they can actually experience the dark and stormy.
That's no fun. Then it just destroys my mental picture of what I have out there.
We'll send your little man out there to just grab lobsters out of the water, see if he comes back alive. But anyway, very interesting stuff that Mike said. So there's two things. So my prediction today is VIX will be down on the day. It's only up a quarter, but it was up. It was trading 24 and change maybe this morning, and it did not hold that It did not hold that rally at all. Normally for VIX, that's not good because the bid for vol is going away. And Mike brings up Bitcoin. And I do have some followers on Twitter. I don't know. I've been 10 years I've been trying to do it. So maybe I have 4,200, 4,000 followers, let's say. And my big question is, so Bitcoin is an interesting thing because the vol goes up as the underlying goes up. And that is what we'll call a commodity skew or breakout skew. And a lot of stocks have been exhibiting that. If you subscribe, I have a newsletter inside of Option Pit that I write once a week at least that kind of describes different market phenomena. And this is what I said, so as long as these things are exploding upward, the vol is coming up with them. It's huge interest, paper buying, huge interest on the upside. Hard for vol to come down into that. And right now you're seeing with the Q stocks, right? So QQQ is down. But you're not seeing huge action out of the volatility. It's up, okay, but also because it's down 2%. I mean, it's hard, but the fact it's down 2% and the vol is barely moving at all. Okay, so on a realized move, that's pretty high, right? It's almost a 32 vol. So you're getting a little bit of move. So what's really happening though is because things are stopped being stretched in one direction, it's actually allowing the vol and the skew to come in again because, maybe we've set a range or a top for the Qs. I don't know if that's, it's not like they can't go up anymore, but, maybe this could be the start of the unwind on the COVID trade, where everybody was buying tech and everything related to tech and, tech stocks are going to rule the world because everybody's going to be stuck in their house. Either there's news this weekend, there is vaccines doing well. Maybe it's the 2 masks from Fauci. I don't know. Who knows? But there's definitely a tone change today in what I would call the COVID sensitive cruise lines, inflation sensitive stuff like oil, all the oil stocks, all of the COVID vaccine stocks are nowhere. Pfizer's lower than it was last year at this time, at the start of 2020. So they don't care about that. All the hot tech, like Palantir, stuff like that, down. Peloton, the bike, down from 150, now trading 130. Zoom is also. So you're seeing some of these dollars leave. Okay, well, maybe if we go back to normal, where are the stocks, Exxon is still down $20 from where it was last year when all this started. A lot of the oil stocks are still down 20 to 25, 30%. Oil is back. Crude is back to the price it was before the pandemic. So even the Saudis saying they were going to cut some production, apparently that has fallen on sort of deaf ears. So, when you look at the market action, we have a 22 VIX. Remember, those future premiums were super pumped. We talked about that last week. That was the most expensive vol around. And it's not that the market can't move that much, but it wasn't then, right? So what do liquidity providers do? They just make stuff more expensive when people buy it. That's their job. As you recall, Mr. Longo, okay, they buy them, they buy more, you make it more expensive until people stop buying it. So I think we got to a point where because tech, everything just kept getting swept up and the demand was insane. Now, all of a sudden, there's actually some sellers at this level. People are starting, whoever is starting to sell some of the big name tech. They're selling Apple. They're selling Tesla. They're selling some of this stuff. And it doesn't mean it can't all turn around and go back up. But at least for right now, maybe some of the, that string has just been pulled up, pulling the ball up. And it's slowed down. Then look at something like a Riot or Mara that are basically, what are they, just holding companies for Bitcoin miners? Those stocks are down and the vol is down, right? So again, the curve coming in, vol compressing. I think in general, these are probably better times to buy those types of stocks that are crazy if you want to. I like backspreading them myself. They're kind of fun. But that's what you got as far as curve goes. So you do have this kind of bizarre vol curve market. I think there's different opportunities. Yes, I don't know where Bitcoin could go. I'd be curious if I know the show listeners follow it closer than I do, but I think, to be honest, what if a couple of companies decide to add Bitcoin to their cash balances? They just we'll just take 100 mil and buy some. Like, where does it go from there? Because, all it takes is one. Corporate America, they can be a little bit, what do you kind of follow the leadery there, right? Elon Musk, he's crazy. I mean, that guy might be crazy, but he's pretty rich. So, I don't discount anything that guy does, because he's usually just a little farther ahead than everybody else. So, and that's what I'm looking at it myself. Like, okay, and I would back spread. It's not like I would get like massively long it, but where are the opportunities to do that? And who knows? Now it could all just go back to 5,000 in 6 months or whatever. Who knows? I have no idea. But this is at least how the market is pricing the vol, and vol is pricing the demand. So what you'd see here is, maybe it just, this big tech run on COVID is finally, maybe it's just petering out. And like when things peter out, that's how vol comes in. And things can change very, very fast, right? As soon as whatever the narrative changes. So again, I don't know if that's all going to come to pass, but that appears to be what the vol is doing today. Because you have a pretty good sell-off in the Qs. And it appears that volatility the vol market was already expecting it. It was already priced in. It was super expensive. And now that it's happening, I think there's some profit taking on those puts, and vol comes in, and then we see what happens. But really big day for all of what I would call stocks that just got murdered in COVID. And they have plenty of room to get back if, what I think will happen is the world will get normal again. Very simply. It got normal after the Spanish pandemic in 1918. I see no reason why it won't do it again now. So, but anyway, that's it. And of course, 21 puts in VIX, always a sad story.
21 puts in VIX for the win for the Rock Lobster there. Well, hey, if it closes down on the day, we get a little bit of downside back action. Those 21 puts could be looking hot yet again. Let's see what's looking hot from an overall volume perspective. See what you crazies are out there trading. Not slinging a heck of a lot of VIX 21 puts or anything else VIX related today. Only 155,000 contracts on the tape as of a few minutes ago out there in VIX land. The ADV just a tick under 700,000, 699 out there in VIX land right now. SPY at about 2.2 million as of a few minutes ago. The ADV 4.08 million. The S 665,000. The ADV 1.2 million. So both SPY and the S at about half their ADV, which is about what you'd expect. The VIX, though, kind of lagging out there. The Q 791,000, so they're closing in on their ADV of 979. Not much farther till they get there. IWM, also a light day for them. Not a lot of small cap love out there. IWM 195 out there on the tape. The ADV 728,000. Small caps have been lighting it up of late. Let's go to single names, see what you folks are slinging. Starting with our friends across the street here, Boeing. Number 10 cost you 248,000, so right around 250,000 contracts to break into the top 10 today. Not bad, not crazy, but not bad, not nothing. It's not $1.30 either. So a pretty active day out there. Friends over there across the street, you might think the news of late has been pretty dire for them, and yet their stock actually up about 75 cents right now to a little bit north of 218. So maybe shrugging off the bad news. They took a hit last week off the news of this engine effectively falling apart in the sky, 211. A lot of that seems to also have transferred over to Raytheon, which is the parent company of Pratt & Whitney, which is a big engine manufacturer back in my old stomping grounds of CT there. They're off a little bit, still trading 74.18. They also took a drubbing last week down to 72.25. But they all seem to be rallying a bit of late. Well, Raytheon off a little bit today, but they have rebounded from their lows back when that news first broke there, or even their lows this morning. Looks like Raytheon was down at 22 or 72 and change just this morning. So yeah, interesting run here for Raytheon and for Boeing. Number 9, good old Softy, still fighting its way into the top 10. Good for 269,000 contracts. Number 8, no, it's not Creedence Clearwater Revival. It would be cool, but it's Carnival, CCL, 314,000 contracts, getting to that post-COVID future, perhaps, that Andrew is referring to. CCL up $2.50 or about 10.5%. So perhaps the post-COVID boom, when someone can actually take a cruise again, perhaps is looking closer in their future out there. This name over the last month has gone from about $20 on January 22nd up to where it is right now, $27.20. So it's been a good run for Carnival. Number 7, Pabst Blue Ribbon. No, joking. It's Petroleo Brasilio. This is obviously an ADR. This is Petrobras. This is $7.98 off $2.08, and that's good for 325,000 contracts on the tape. Number 6, GE 345. Number 5, American Airlines. Again, getting to that, perhaps that post-COVID future the Rock Lobster was alluding to. They're up 11.75%, or 219 up to nearly $21 out there right now. That's good for 405,000 contracts. Number 4, day that ends in Y. It's got to be a few electric car makers in there, including NIO. 420,000 contracts. Number 3, Palantir has been glued at number 3 ever since their earnings. They're on just another trajectory, another stratosphere, another regime entirely over the course of the past week. Good for 707,000 contracts out there. What a day. They're trading about 28.25, off about 75 cents or about 2.5%. So an active day out there, and certainly an active day in the options. Palantir, ever since their earnings, has been just on another level. It's threatening Tesla. Tesla number 2, 788,000 contracts. You know what number 1 is? It's the big dog. It's Apple, 1.04 million contracts. Let's look really quickly at some earnings, because there are some popping off. You guys know where you can get all this data for yourselves completely for free. TheOptionsInsider.com. Click on the Options News and Articles tab there, top right corner. And you're off to the races. This week we've got Royal Caribbean. Today, Marathon Oil. Tomorrow, good old Home Depot, Macy's, and Square, and Intuit. Wednesday, Lowe's, Six Flags. Interesting one. Redfin and Viacom CBS, and NVIDIA, a name a lot of you watch these days. Thursday, Moderna, another one a lot of you watch these days. Domino's, Best Buy, Wayfair, Beyond Meat, Airbnb, Etsy, another one a few of you have been watching of late. Friday, DraftKings, another one you got. A lot of big names popping off that you guys actually trade this week. AMC, that one's been in the headlines of late. You know why. And then Cinemark and Foot Locker. Let's see. We got some names. Royal Caribbean popping off before the bell. They went into their announcement 78.87. And let's see. They were pricing in 6.5% vol. They delivered 10.5%. It's one of the few names to actually outperform. And right now that's actually increased up to 11.75%. Right now. So this one also blowing the doors off of it. Obviously, probably giving some good guidance for the future out there that, hey, they're actually getting, it looks like they're actually getting some bookings. Whether they'll be able to take those or not, we'll see. A lot of names have been canceling, but hey, hopefully they'll be able to go on a cruise again in the near future. So yeah, that one's one of the few names that has been outperforming of late, because a lot of the season has still been kind of light. Well, first week, again, you can look at the season report. We had that up there for you for free as well. Week 1, 53%. So you got about 50 cents on your dollar for premium buyers out there in earnings season. Week 2, not much better, 58 cents on the dollar. Week 3 got a little closer, 92 cents on the dollar. Week 4 almost got there, 99 cents on the dollar. So it's finally almost breaking even. And then we're back down to about 75 cents. But again, we're just kicking it off here. So still in the early blush. What else is coming up this week? Like I mentioned, Home Depot there. Let's see. I have the earnings move reports for them as well. They were at $279.64 heading into this report. They were pricing in $9.47. In the past, listeners, $4.92. So pretty much double their previous move. So a lot of juice out there. There's been a lot of action in lumber. If you listen to our TWIFO show, you know, lumber's been moving quite a bit, and that's a big driver for what's going on over there in Home Depot. And I've heard actually there are some building freezes going on in parts of the South and other areas because lumber is just getting too expensive for them out there, which is kind of interesting. Intuit, they were at $411.35, another rich one out there. They were pricing in 16.5%. In the past, they moved $11.06. So, excuse me, $16.47. In the past, they moved $11.06. The move reports are in dollars. The move results reports are in percent. There you go. Keep that straight in your head there. Square, 276.5. They were pricing in $22.41. In the past, they moved $18.40. I'm starting to see a trend maybe in the other direction. Maybe a little bit of outpricing some vol, which is kind of interesting. And then good old Upwork, 56.01 heading into this report. They were pricing in $8.50. In the past, they moved $7.41. So I'm detecting a theme. Lows really quickly. They're bucking the trend. They were at 177.5. They were pricing in $8.80. In the past, they moved $10.33. So not pricing in as much juice as Home Depot, which is interesting given that they're in effectively the same category. Let's go one more, a juicy one. NVIDIA, $597.06. They were pricing in $36.14. In the past, they moved about $28.50. So a little bit extra juice out there in NVIDIA as well. You can do all this analysis for yourself for days. We got it all for you. AMT, Best Buy is there, Moderna, they're all there and a whole bunch more. TheOptionsInsider.com. Now it's time for us to keep rolling. It is time to unleash the Eye of Sauron. It is time for the Eye Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, let's do it. Listeners, let's kick it off. Let's see what our Eye of Sauron has fixed its gaze upon today. First, we peer our gaze over there into a newcomer to the Odd Block. This is Bill.com. Ticker symbol Bill, B-I-L-L. Trading right now 179.38, off nearly $5, or about 2.6%. This is the name that's had an interesting saga over the past year, and by year I say... By the way, we are pretty much right beyond the 1-year anniversary of when the worm really turned last year on February 20th. That's when the sell-off really began in earnest, and we saw the first real shocks reverberating into, of course, what became the tailspin there in March. So happy, inauspicious 1-year anniversary in the markets out there. A year ago, Bill.com was trading $55.24. It got as low in the great nadir of $23.61. Like we said, it's a wee bit north of that now. It got up to, by October, it was trading 119 again. So this one rebounded pretty quickly. By December, it was trading 149.5. Then it gave up a bit again. By January 27, back down to 113. So it sold off pretty substantially. And then it's been on a rocket ship since January 27th. It's gone from 113 all the way up to 192 a little over a week ago. And now it's trading 179.38. So this one's been on the rampage just in the last couple of weeks. Let's see what our Eye of Sauron has found. Is it someone maybe scooping up calls, thinking this party is going to keep going? Let's find out. No, it's the other side of the fence, listeners. It is puts. In particular, they are the March 140 puts. So 39 handles out of the money puts, going up 14,779 times. For 65 cents, by the way, if you're wondering, this market was 45 cents at $4.10. Yeah, that's not a good market by any stretch of the imagination. I don't care how illiquid the name is. That's pretty disgusting. Either way, these puts went up for 65 cents. So interesting stuff to read into here. They are 23% out of the money if you are interested. It's only a 64 volatility compared to what we've seen of late. That's actually a pretty nominal level if you're looking at harvesting some volatility. There are earnings, but they're not in this cycle. Next earnings are coming up on the 6th of May after the bell. So not talking an earnings play here where they're getting some earnings juice in the old harvestings. Mr. Rock Lobster, first off, what are your thoughts on this fantabulous market of 45 cents at 410? And then B, what do you think about what looks to be some line in the sand puts here in everyone's favorite name, Bill.com?
Can you say line in the sand puts?
I think I could say that. I think I did say that.
I think you did. I mean, you take away all my thunder. Of course, you give me the layup, right? We've got a $4 wide market and the puts trade 65 cents. So, what are you doing with that? Very, I'll tell you what, that's how, you want to know how vol goes down, how VIX goes down? Because people start doing this. They sell, even though the stock was $100 a month ago, they're in to sell the 140 puts. That's how vol goes down. So, I would just guess, that's what happened. What's the active delta on that put? Probably maybe an 8 delta, let's say. The March 140 puts. I was off. It's a 6 delta put. But yeah, I mean, there people are selling the juice. What can you say? Here we are, 3,900. This stock was $100 a month ago, and they're selling the 140 puts now. So maybe that $2 trillion stimulus package is something, but I think this is worth watching. This is one of the more, normally they kind of look like layups to me. This one is a little, even though the put's only 8 delta, and after the put trades, it's 85-cent bid in the person's face. So I have to say, I'm just going from this. This isn't. I'm not as big a fan as this put as some other ones. I think this one's a little touchier.
A little touchy. We'll put this in our to be watched category and come back to this one before March to see how this one fares. You're right. This is an interesting one. If you wonder how much premium they are collecting, they're getting close to $1 million, about $960,000 to draw that line in the sand nearly 15,000 times on the 140 strike. What are your thoughts on this? The fact that they're bidding their face, never a good sign. Listeners, let's go on out to our next name. This is this may be a newcomer. If not, we talk about it infrequently. This is CNH Industrial. This is a farm machinery and equipment company, ticker symbol appropriately enough, CNHI, trading. Let's see. Let's get the right one. Let's make sure we got the right. They're putting in a couple of different ones. There we go. All right. Ticker symbol CNHI. And they're trading right now $15.33, as the Irish like to say. A year ago was trading $8.81, and then it sold off even harder in the Great Nadir. Got down to $5.06 before slowly rebounding. Got up on everyone's favorite day, June 8th, back up to $8.13, and sold off again. Didn't really make that level again until October. And then it kind of took off again after that. By November, was trading nearly $11. By January of this year, it was trading $13.32. And then it got up to $15, pretty much 33. That's the high right now, right off a dime off the high for the year out here. So we're looking pretty top heavy here, or at least pretty elevated here in good old CNHI. Let's see what our Eye of Sauron found out here. Going a little bit farther out the trading spectrum, Mr. Rocklop. This is fun. We don't get a lot of these. 6,700 of the Jan 2022 15 calls going up for $2.47.5 over there on the Amex. They were offered at $2 double. And this is actually a much tighter market for the year-out calls than those crappy puts we just talked about a few minutes ago. But c'est la vie. I digress. So it looks like someone getting a decent fill, $247.5 on these bad boys. There obviously are going to be earnings between now and next January. The next one is on May 5th over here. So interesting stuff afoot, Mr. Rock Lobster. It looks like has the whiff of perhaps a bit of ye old stock substitution here, buying a fairly, not in the money, but slightly in the money call right now and putting it out for a year. So getting some deltas on the table, going around a 50 delta, paying about, $1.65 million for the privilege. Of course, if you bought the stock, same amount of stock, that would have cost you over $10 million. So an interesting outlay. What are your thoughts here on someone loading up on effectively 1 year out at the money calls here, and everyone's favorite name, CNH Industrial?
A very interesting trade from that point of view. I think, good use of buying calls instead of buying stock. Kind of the company looks like it weathered the whole COVID thing pretty well, actually. kind of plodding along. It generates, let's see here. Let me see. Divvy, I mean, it pays an 18-cent dividend. That's pretty big. It's been paying it. It pays a dividend one time per year. And let me see here. So, I mean, it seems like it did okay in the COVID era. There wasn't a lot of high expectations, but like a lot of things right now, companies that make money that are not have crazy valuations are going to look a lot more interesting. So I think the easiest litmus test for a good call buy, do you know what that is, Mr. Longo?
If the rock lobster likes it?
There's that, but it also, if the calls are bid higher than when you paid for them the same day, that's usually a good sign.
That's usually a good sign. It's the opposite of what we were just talking about with those puts.
Yes, the puts got bid in their face. That's why I thought those puts are a little touchy. I think this is a reasonable price for an at-the-money call for, 10 months. And as we all know, I want you all to flip back a year ago. How much different the world could look in 10 months. That's what people don't understand about long-term options. I personally like buying them because the time component is just who the heck knows, like you just don't know. So, but again, reasonable stock replacement type trade for sure. Yep.
We'll keep an eye on this one. We're obviously going to come back for it a while from now. But yeah, interesting. You could see why we talk about sometimes the capital efficiency of options, 1.65 million versus 10 million. Obviously, delta Y is not exactly equivalent because we know that's talking a 50 delta option roughly there. But still, interesting. You're not talking half the outlay, not even close. So interesting bit of capital efficiency usage. Let's go to our last name here. This is another one we don't really talk about too often. This is KDP. This is Keurig Dr. Pepper. Trading $31.42, up about 18 cents or about 50, almost 60% on the year. Let's look really quick. The year ago was trading $29.14. So right before the big sell-off was pretty much where it is right now. Got down to $18.98 in the big sell-off. Then it kind of popped right back. By April 15th, it was trading 27.5. So this past year has kind of been a bit of a lost year. It's kind of slowly drifted up to 31.5 and back down to 27 and change. So it's kind of been vacillating in this 27 to low 30s range here, up to like 33.5 or so. And that's kind of been about it for the year. That's been Keurig Dr. Pepper. From that name, I defy you to guess what it is that they do. What did our Eye of Sauron find? It found the April 32 calls, so slightly out of the money calls, going up 6,400 times for $1.20, lifting the offer over there on the Philly. Worth noting, there are earnings coming up, and they are coming up in a couple of days on the 25th. So got a little bit of earnings juice. Our friends over there in Oras Land also zeroed in on Keurig Dr. Pepper. It was number 9 on their scans today with 2.5 times their volume compared to the 20-day average out there. And they noted 11,000 options on the tape versus the normal volume about 4,400. Good chunk of that, 6,400 coming on these 832s. Mr. Rock Lobster, looks like we got a bit of the old school odd block, scooping up some near-term earnings calls. So this time, at everyone's favorite name, Keurig Dr. Pepper.
Yes, kind of an interesting one, right? Keurig, did they buy Green Mountain too? I can't remember who bought Green Mountain. There's so many takeovers.
Yes, they own Green Mountain as well.
So they bought the whole coffee complex. Very, very interesting one. Yeah, this is another one. I think it looks, I can't, so at the time, yeah, it clearly looks like somebody was buying them at the time with where the market was. And yeah, they are going for a little bit of an earnings pop. A lot of these, again, this is another company with, pays a pretty huge dividend, 60 cents on a $31 stock. That's not small, not even, so again, little bit of a value trade. Going forward, I mean, it looks like reasonable spec, right? $1.20 on a $31 stock. Not too bad at all, to be honest. So I think this is let's just say a reasonable speculation price for these calls. Yeah, it yields like 2% a year for buying Dr. Pepper. So look at that.
The man loves himself a good divvy stock. We'll watch this one, come back to it as well. But talking about value, doesn't get better value Then the strategy block, you get Uncle Mike dispensing some options, wit, and or wisdom. What does it cost you? Absolutely nothing. So let's do it. A little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, it's that time for Uncle Mike to come on down, step away from his horde of 50 Twitter followers, and dispense some options, wit, and or wisdom. Uncle Mike, you were hinting about action out there in the fixed income side of the market today. So I got a feeling, I got this feeling in my gut, Uncle Mike, that you're going to tell us something about, let's say, trading options in or around some bonds today. What do you think, sir? Is my gut correct?
Your gut's correct. So are your birdies on vacation?
The birdies have the COVID, so I instead am relying on the old gut, which is always a reliable indicator.
That's good. Okay, so one of the things that I hear a lot about in the financial advisor world is, where can I get yield? I want yield. I have a lot of clients that are in their 60s and their 70s, and oftentimes they talk of the fun days back in the early 80s when they could get a CD for 10% annualized and didn't even have to mess with any of the stock market or financial advisor nonsense, for that matter, is what I'm told. But obviously that's not the case in today's market environment. And even so, with interest rates at next to nothing right now, there are opportunities out there, and I think it's important that you can take a look at some of these to help you if you're looking for yield out there. Now, I'm going to illustrate LQD today. And full disclosure, I do not own LQD. None of my clients own LQD at this point. I'm not against it, but I'm just not a huge fan of corporate bonds at this point. But I'm just using it for purpose of illustration because of the fact that I don't own it. So let's say you do want to own corporate bonds. If you want to have exposure to them, well, LQD is a good ETF that can give you that, depending on what you're looking for, in that it has its investment grade corporate bonds. Investment grade meaning triple B and above. Anything below triple B, if you're a bond wholesaler, you refer to them as high yield. If you're an investor, you can refer to them as junk bonds. And so with that, with LQD, it's an ETF that has exposure to that. As of earlier today, the annual dividend yield on LQD is 3.19%. So you're thinking, okay, so I have to take on the risk of corporates to get 3.19%. Well, yeah, you do. And there is risk to bonds. So if you look at a chart of LQD, you can see roughly a year ago where it was during the COVID downturn. And then the government did agree to do some bailouts, and then it kind of came back and it was fine. But let's say that you're just looking for some yield right now. The covered call on bonds is something with which to consider. So with LQD, let's just do something very basic. Let's go 1 year out, or 11 months out, I should say. And right now, LQD is trading at 132.71. And let's say you sold the 133 call. You could get roughly $2.50 for that. So now, with that, you gain that $2.50, add that with the yield that it advertises, and let's assume it pays the yield, because there is always a possibility that bonds don't pay their yield. That is always a risk, but let's just say that they do. And you add those two together, you're going to get close to a 5% yield over the course of 12 months. And the covered call expires in 11 months, as if life couldn't get any better. So my point is that if you are looking for yield, one thing that I've been doing is I've been selling covered calls on bond ETFs. The three big ones for government treasuries are SHY. That one you're not going to get much for. That it's not going to be that exciting. IEF, full disclosure, I do have exposure to that, a pretty decent amount of exposure to that through my clients. On TLT. TLT is one that exposes the longer term bonds, 20-year pluses for government treasuries. IEF is for 7 to 10-year government treasuries, and SHY is for very short-term government treasuries. I believe it's 2 years and below. So on there, you have the ability to have exposure to bonds And if you're concerned with with them going down, which bonds can go down, look at a chart, they have been going down lately. You can have the ability to make up for them and create more yield by selling some covered calls against them. I like the concept of doing a wheel type trade with bonds. I think it's a way with which you can be active on them, still create a little bit of yield, and take off a little bit of risk. Now, once again, if all of a sudden we do have a major bond crash, a covered call is not going to help it that much. But you got to kind of look at the reasons of whether it makes sense to have exposure to something and what are the risks of a crash. And at least in the near term, I'm not seeing a bond crash in the U.S. government treasuries. So with that, that's something that I like to do for creating yield in a world with which there's not a lot of it.
Indeed, there's not a lot of yield, but there are a lot of your questions. Let's see if we can squeeze one in really quickly here. Quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, welcome to the mail block. I'm going to get into it quick. This guy's been hitting us up. Bit of a panic here. Let's see if we can get to him. He says, this is from DC Well. He says, if my Microsoft contract falls in value and stops out before my covered call option expires, then will I still collect the premium? So it sounds like Mr. Rock Lobster, if I read between the lines of what he's asking, he's kind of using a couple of different terms interchangeably there. It sounds like he has Microsoft. He wrote a covered call on it, but he also has a stop loss on the stock, and he's worried that if it drops and he gets triggered, what happens to his call premium? Does he get it, A? And then he wants to know if brokerages even allow it. Will he still be allowed to have his short covered call if he gets stopped out of the stock? Mr. Rock Lobster, what do you have to say here for Mr. DC Well?
Very interesting. I would be surprised, unless it's a margin account, that he could even put in a stop order while he's short the call with it. Because then you would have an uncovered call, and you would clearly, if he can afford the stock, he has enough money to afford the margin of the short call, I think. But if it's in a qualified money account, I don't think they let you just sell naked calls. So it depends on what kind of account he has. But would he be able to keep the premium? It's like you don't get to keep it. It's just the premium has a market value. So if you're stopped out on the stock, the market value will be less on the call, but you still have to go and close that short call. They're not going to close it automatically for you unless you have the order and has a buy right to close. Maybe TOSAW has some more thoughts on this one. But
Mr. Uncle Mike, any thoughts on this one? Because you're right. On the first blush, it is, you're right, an uncovered call, but we've seen, shall we say, some less sophisticated, newer options brokerage firms. Maybe their systems aren't advanced enough to do that math and realize you put that stop loss in there. All of a sudden you've got an uncovered short call there, which is a different calculation from a margin and a risk perspective. Just go look at GameStop recently if you want to see what potential risks there are in just being naked short a stock, which you effectively are if you are naked short that call. Mr. Uncle Mike, anything to add on this one, sir?
Yeah, Andrew's right in that you would be naked that call, and so a lot of brokers will not let you do that unless you are approved for uncovered call writing. If it's in an IRA or a qualified account, you won't be. But if you do, it would have to be a non-IRA account for you to even be approved for it, and a lot of brokerages make you get special approval for uncovered call writing. And so likely the two ways with which I would consider doing this if you want to manage risk along those lines. One way, set up a contingency order. A lot of brokers will allow you to do that to get out of both the stock and the call together, contingent upon the stock going down to a certain price. Just have a market order to buy to close the call, sell the stock simultaneously. Most brokers will allow you to do that. Or the other way, if you want to just get out of the stock and try to keep the premium, what you could do is sell a call spread and then have the stop loss on the stock, and then it becomes a call spread, and then you have a bearish call spread should that happen. So those are a couple of my thoughts on it, and that's what I think.
Interesting stuff. Great question. Some of these nuances there, people particularly who are newer to the space. If they do let you go through with this, I wouldn't be surprised if going forward after that, if you just have that naked covered call or naked short call, all of a sudden maybe you're retrading capital in your account. Don't be surprised if it's a lot less because they're going to tie up a lot of capital against that naked short call you got there, Mr. What was it? DC. Well, interesting question, though. As you head on into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's do it. Let's go around the block. Mr. Rock Lobster, we'll start with you, sir. A lot to unpack, a lot to watch in these markets. Where is your gaze? Where is the eye of Vol Man fixed these days, sir?
Well, he's not surprisingly fixed on vol. I thought we would see a red VIX today, even with the NASDAQ down 1.5%, and it did. It turned red for a brief amount of time. We'll see how long it goes, but ultimately, the market is kind of saying we're going to see some more opening up. Now, we saw this in June. Remember, everybody got excited and bid everything up again, and then it all got really sad and the vol exploded. So I'm interested to see now, a year in with the vaccine and maybe a little bit of fatigue in these schools trying to open that, and half the states are kind of already open. I don't know if everybody knows that, but it actually is true. So I think this might be the first blush of some of the COVID coming out of the market. So I would say looking at cruise lines, oil stocks, airlines, Boeing, if the engines would stop blowing up, old line industrial companies, stuff like that. So we'll see if this continues. But right now, that's what it appears, because they're kind of taking the huge value tech off and moving into what I would call like more bread and butter industries that are trading at cheap valuations.
There you go. Uncle Mike, same question for you, sir. What are you keeping an eye on until we gather here together on Thursday?
Well, just to add to what Andrew said, seeing if we do continue to open up more. Shout out to D303 in St. Charles. Our kids do go to school every other day, so our district is at least trying, and they have been for this whole school year, so that's wonderful. And hoping to see if this downturn in COVID deaths with what we're looking at in recent numbers holds true. Staring at 3,900, I tweeted last night, 3,900 is kind of a magnet number, it feels like, for the S&P lately. I only got one like, so not many people agreed with me. They probably looked at it this morning and thought I was crazy, but now I'm not crazy anymore. But who knows? I'll still be crazy nonetheless. So 3,900 and COVID numbers are the main things I'm watching.
You'll always be crazy to us, Uncle Mike. Unfortunately, that music means we come to the end of this sojourn, but you need more in your ear holes. Don't worry. We'll be back in exactly an hour to break down. We're not afraid of it. We're one of the few shows on the planet that dares to wade into those stormy, indeed volatile waters of all things crypto derivatives. We're going to talk about Bitcoin. We're going to talk about ETH, maybe a little Doge. You never know what the hell is going to make it on that show. The Crypto Rundown in less than an hour now, coming up live. If you're listening live, we'll pump some fun stuff into the stream. We'll be back in exactly an hour. Before we go, let's go back around the horn. Uncle Mike, if folks want to join that growing horde of 50 Twitter followers, where should they go? What should they do?
At Mike TOSAW. Follow me on Twitter. In the coming weeks, I'll be having a lot of things. I'll have an expanded strategy block that I'll be tweeting out through a blog that's in the process of being built right now. So at Mike TOSAW, and go to my website if you want to learn more about what I do as a financial advisor who uses options, stcharleswealth.com. And to add to the crazy comment of earlier, I've always been crazy, but it's kept me from going insane. Quoting the great Waylon Jennings to honor Texas.
I don't like this. I'm looking at your Twitter handle right now, and it's showing my name as one of your prominent followers. So it's using me to advertise you, sir. I'm not sure if I'm on board with that. I might have to go out and talk to Twitter. Say, what are you doing leveraging me to sell Uncle Mike? Instead, let's go around the horn. Let's go out to the land of @OptionVol. He's also on Twitter if you want to follow him. Mr. Rock Lobster, what can they find if they follow you there, sir?
Oh my gosh, on Twitter, Volman puts a couple tweets a week. Usually when Vol looks like it's going to inflect or change direction, that's when he rears his head. I actually did a tweet not long about SQQQ calls, looking kind of inexpensive. But go to optionpit.com. Go get your Robinhood on, get your Trading Legion on, get your Vol Trade Club. All ways to learn how to use Vol to help you make better trading decisions. So come on to optionpit.com and get your Vol learning on.
There you go, optionpit.com to get your Vol learning on behalf of the Rockingest of Lobsters, the Unclest of Mikes, and myself. I want to thank all of you out there for downloading, streaming, subscribing. Remember, we'll be back less than an hour, now 57 minutes. Man, it's volatile in the world of Bitcoin. It's whipping, it's sawing. What the hell is going to happen? It's over $1 trillion. We were just joking about that not too long ago. We'll be back for that. Then back again tomorrow for all the fun stuff on Interview Tuesday. Education Wednesday follows that. You got Boot Camp. You got Options Playbook Radio. Thursday, you got a double dose of TWIFO and the second episode of the Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.